What is Class FF stock? Well, Class FF stock is very similar to Founders stock. That is, Founders stock is a special type of common stock that generally has some protective characteristics that are somewhat similar to preferred stock. But in general, it's more restrictive type rights rather than being purely a preferred form of equity interest. Class FF stock is more similar to a preferred type of share or ownership interest in the company. So oftentimes the company will create a Class FF stock that is not the preferred type of stock that is issued to equity investors and not the common shares that are issued at founding of the company, even if they have restricted rights and are thus called Class F stock. These Class FF stocks fit somewhere in the middle. Okay, so they have characteristics of preferred stock, but they aren't exactly the same as a class of preferred stock being issued. Okay, one of the most important characteristics there is the class of stock can be converted into common shares. This is a very common provision for preferred stock. That is, they can be converted from the class of preferred shares that investors are getting into the common shares that are held by founders. And next, the shares can be converted into a future type of preferred equity if a future type of preferred equity is issued later to subsequent investors. Now, this is a really unique provision in that it allows the otherwise founder shareholder to participate in a future financing round by exchanging or converting their existing stock for an interest in the company represented by this new class of share, this preferred share that's being created to be sold to future investors. So in a way, it's simply a type of stock that allows the current holder of the stock to take part in a future financing round by converting their existing shares into that future type of share. Now, there are some limitations there. If you're going to convert to a future type of equity, it has to be based upon the valuation of the company at that time. So you have to, in essence, pay the same price as the equity holders are paying in that future equity offering. It generally has to be approved by the board of directors, and if there's a specific class of FF stockholders or preferred shareholders that are investing in the company in the future, they have to approve this conversion. So those are the primary limitations. But Class FF stock are generally only common in startup ventures that go through multiple rounds of equity financing, where you end up with multiple types of preferred shares of the company, and early founders see the need to participate in future rounds of equity by converting their existing stock interest into that future type of equity. So this is what Class FF stock is and how it's generally used.